A lot of the gold miners did pretty well because they had big revenue increases because the price of the thing they were selling was way up. And the best run gold miners saw most of that revenue increase percolate down to earnings and cash flow. So they reported some really good numbers. And that has helped. Now, in the last few months, the gold and to an extent the silver miners have just kind of outperformed, for instance, the GLD physical gold ETF. So it's starting. The miners are starting to outperform gold. Now we've got third quarter earnings coming out. And since gold went up pretty dramatically during the third quarter, you got to expect the gold miners to report even better earnings than they did in the second quarter. And that means that the gold miners start popping up on the radar screens of momentum investors. If you're looking at earnings momentum.
Many gold miners performed well in July and August due to solid revenue increases driven by rising gold prices. The best-run miners saw these gains reflected in their earnings and cash flow, leading to impressive financial results. Recently, gold and silver miners have started to outperform the physical gold ETF, GLD. With third-quarter earnings reports approaching and gold prices having risen significantly during that period, miners are expected to report even better results, drawing the attention of momentum investors who track earnings growth. John Rubino, an author, speaker, and financial commentator, explains that gold and silver miners haven't outperformed precious metals due to rising costs, such as higher energy expenses and wages in the mining sector. The shortage of experienced mining engineers and increasing geopolitical risks like countries altering regulations, taxing, or even nationalizing mines have added to the challenges. These factors have made mining tougher, limiting earnings growth despite higher metal prices. However, there's a price level for gold that could offset these increased costs, benefiting miners in the future. John Rubino exposes generalist momentum investors have driven significant overvaluation in sectors like the Nasdaq, with major companies nearing bubble levels reminiscent of 1999. This poses substantial downside risks, particularly in a geopolitical crisis, which could trigger a sell-off in these overvalued stocks. New investors must recognize the risks of buying momentum stocks at market peaks. When the equity bull market eventually falters, precious metals miners will likely outperform due to their relative affordability and the historical trend of capital shifting into safe haven assets during market stress. This suggests that while equities may decline, gold and silver could remain strong, benefiting miners operationally. As you watch these clips, we encourage you to like this video, subscribe to our channel, and hit the notification bell so you're instantly alerted whenever we post new content. We appreciate your support and hope you enjoy the video.
Gold and silver miners didn't outperform precious metals this time around because their costs were up so much. Energy costs, though they're not up dramatically just lately, they've been up for the last few years. Wages are up dramatically in the mining space. There aren't just not that many engineers are going into mining, and so as the older generation of gold and silver mine engineers starts to retire, they're not easy to replace, and you got to pay way up for serious talent. And then just wages are up in general. For everybody else besides the engineers, you still got to pay up. So miners are, and then there's geopolitics. A lot of countries are changing the terms under which they regulate and tax miners. And some other countries are flat out closing mines and nationalizing mines and things like that. Panama just closed down one of the biggest copper mines in the world. Mexico has been talking about banning open pit silver mining. They haven't done it, and hopefully they won't do it, but they've been talking about it. So that's the kind of thing that, first of all, scares mining investors because, you have this big problem that you didn't used to have that you've got to factor in. So risks are higher. And then earnings aren't growing quite as fast as they ought to given the underlying metal price trends. So it's just a tougher business. And that means, as I said before, there's a price for gold that fixes that, that makes revenues so high that it just swamps cost increases on the operating side. And it looks like we're heading into that territory. But that miners haven't gone up before this is because the business just got much harder than it used to. So that there's some investing implications for that too. I don't know if this is where you'd like to segue into that, but we should keep that in mind for the rest of this talk. Generalists, momentum investors have had a whole bunch of other things to look at besides gold miners in the last few years. And what that did was it led to an awful lot of overvalued sectors out there because you look at the Nasdaq, basically the handful of big companies that dominate the Nasdaq are about as overvalued fundamentally as they've ever been. We're getting into dot-com bubble 1999 levels of valuation with a lot of these things. So their upside potential is limited and their downside risk is outrageous at this point. If we have, let's see, what kind of a crisis would be a good example here? Let's say we get into a shooting war with Russia or something like that, which we're really on the verge of right now. That would spook the markets and lead to the overvalued stocks being sold off dramatically. And so you'd see a big crack in the leadership of the Nasdaq, and they would just tank. And that's the kind of risk you run when you buy momentum stocks at the peak of a bubble. So we're there now, and people have to learn that lesson over and over again because bubbles are decades long or longer sometimes. So you get a whole new generation of investors coming in who have to learn the lesson that you don't want to buy the shiny bubble stocks at the very top of the cycle. And here's how you analyze a cycle to see if you're at the top. And so a new generation has to learn that lesson. They will learn it. Something will happen to crack the equities bull market, and there's so many things out there that could do that. Precious metals miners ought to outperform when that's happening because for two reasons. One is that they're cheap relative to their history, which you can't say for most of the tech sector. Mm-hmm. And the other is that money tends to flow into precious metals when people are stressed out and worried. And a lot of the things that might cause an equities bear market would just stress people out in general and cause capital flows into safe haven assets. So you could see gold hold its own or go up this time in the next equities bear market. Mm-hmm. And at the same time, the miners are doing pretty well operationally.
Mining executives can pay dividends, buy back shares, or expand when they have substantial free cash. John Rubino focuses on the fact that after downturns, many prioritize shareholder rewards over aggressive acquisitions. However, as cash flows rise, some executives may pursue bold acquisitions, leading to a fear of missing out, FOMO, among investors. John Rubino says recent buyouts like Gatos Silver and Silvercrest Metals signal the beginning of this trend, although it hasn't reached a frenzy yet. As gold and silver prices climb and more acquisitions occur, larger mining companies may start acquiring promising exploration firms, potentially limiting significant returns for investors. However, strong cash flows in mining companies will likely lead to more acquisitions, so investors shouldn't be disheartened by struggling miner companies. Capital will eventually return to the sector, easing financing challenges. Staying invested during this upward trend is crucial, and if you're not yet skilled at evaluating quality exploration companies, it's an excellent time to learn about their key characteristics. Now let's recall the interview.
When you put a bunch of free cash in the hands of mining executives, they have several things they can do with it, right? They can pay dividends to their stockholders, they can buy back their own shares, or they can expand. And the way it usually works is, coming out of hard times, the guys running the bigger gold miners, they still remember how dumb they felt because of the last acquisition they did at the very peak of the last market. So they're cautious. They reward their shareholders by buying back stock and raising dividends, and that feels good. Everybody's happy, but then more cash flow comes in, and more cash flow comes in, and some of the other big guys out there make some front page news acquisitions and look like they're building an empire, and their stock goes up because everybody thinks being aggressive is and so everybody starts piling in because at that point you get the FOMO thing going, and then you get kind of bidding wars and a feeding frenzy in which the big guys buy out the little guys. We're nowhere near there yet, but it does feel like it's beginning. Cisco Mining just got bought out, Gatos Silver and Silvercrest Metals, all in the last couple of months, and the last two in the last few weeks. The premiums over the stock price varied. Gatos was a pretty big one, I think, and Silvercrest was a modest premium. So it's not a buying frenzy yet. There's no kind of panic out there, but this is the way it begins. So let gold and silver go up some more. Let cash flows rise at Newmont and Barrick and Agnico Eagle, and let a few more acquisitions take place, and that the floodgates will open, and there will be a lot more acquisitions and that's good news, bad news for you and I as investors in, say, exploration companies, because when you buy an exploration company, that half of the ones you're buying are going to go bankrupt. So you need a big winner or two. You need some 10 baggers to save you from the losers that you're investing in. And if the big guys are coming in and buying out the best run, most promising exploration companies for 50% premiums over the last 3 weeks average stock price, that's nowhere near a 10 bagger, but that's also how these things start. 10 baggers come at the end of the process when pretty much anything has a market value and there's tons of money to be thrown at the sector.
When we're in that mania phase.
Yeah, because the generalist money starts flowing in, first of all, because they see a few buyouts and that's another trend, so they want to ride that trend. So they start bidding up these little things that can't be valued in any reasonable way. So there's no like PE ratio or anything with a small junior miner or an exploration company. So the generalist money doesn't know how to tell whether it's getting a good deal or not. So it doesn't bother trying. It just buys things with the name silver or gold in it. If their cash flow is just rocking, then there will be acquisitions. Don't want to get depressed over some little miner that you own that's having trouble getting financing and doing a dilutive share offering or something like that right now, because over the next couple of years, there will be capital flowing in and financing will get easier. So they have a chance to do, a share offering on favorable terms or something at some point. So, that's one of the things that you want to watch for. If cash is coming into the sector, then that papers over lots of issues.
The current landscape for gold and silver miners appears promising, especially as rising prices and strong cash flows signal potential growth. While challenges such as increasing costs and geopolitical risks persist, the trend toward acquisitions may lead to further consolidation in the industry. Investors should remain vigilant and educated on the characteristics of successful exploration companies to navigate this evolving market effectively. What key factors should investors consider when evaluating potential mining investments in the current market? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.